You mentioned, Steve, also that underwriting rates were rising quite sharply. And do you think that will continue, or is that just a reaction to the shock of the last 18 months?
Well, so rates have risen quite sharply already in financial institutions. So that's banks and other players in the world of finance. And that's clear because the riskiness of those organisations has clearly changed with this crisis. And one of our key barometers is stock price volatility, and that's really gone through the roof. So there's a reaction from the underwriting community. Increased risk means we need to change our prices. What we've not seen, I think we're just really at the beginning of, we haven't seen such a strong reaction in other industries. But clearly the stock price volatility is there. The credit issues are there as well. And so, as ever, the lawyers will be looking for ways to help shareholders recover their money. And so the riskiness is changing, and our prices need to move in parallel with that. And we try and look at this over the longer term as well. I mean, we should remember that the insurance mechanism is about risk transfer, and in something like this line of business, the directors and officers liability, there are times when it spikes, and there are times when it's better. So we do try and manage the prices in line with that. But now is a difficult time for all the reasons we're talking about.
Kim, there has been some quite interesting case law in the States in recent years, hasn't there, about these corporate governance issues? I mean, I'm thinking of Disney, for example. Right. And what lessons can we learn from that?
Well, I think the plaintiffs' bar probably took their best shot at challenging executive compensation in the Disney case, and they still lost. That was a situation where the board of directors of Disney had approved a very, very lucrative employment contract with Michael Ovitz. He was gone in a relatively short period of time, and yet he was still paid the balance of his contract. The Delaware Chancery Court really took the board of directors of Disney to task in that case, but ultimately, using the business judgment under the business judgment rule, gave them a lot of latitude and held that the directors had not breached any fiduciary duties. So I do not think the plaintiffs' bar is going to bring standalone derivative actions to try to legislate or try to change executive compensation. I think they took their best shot and lost. The big money's not there for the plaintiffs' bar, so I think they're going to probably pass on that. So I think most of the changes in executive compensation are likely to occur in the boardroom and not the courtroom.
So, well, so I'd maybe push back a little, because how would that case now play out in today's environment, where the popularity of executives receiving large bonuses on both sides of the Atlantic has really hit rock bottom? I mean, what would if we could run that again today, would it be a different outcome, do you think?
I'm not convinced that it would be a different outcome in Delaware, because the Delaware Chancery Court takes a longer-term view of these issues. If that case were brought in a different state, then perhaps the result would be different. But I think the Delaware Chancery Court takes a more longer-term view. Delaware, as you know, many corporations are formed in Delaware, and because they know they're going to get a fair shot there in the courts, and there's more predictability. So I don't think that result would be that different today in Delaware, but it might be different in a state that's more populist.
We have talked quite a bit through this on the sort of populist uprising, if you like. I mean, there's a sort of string up the bankers mood around at the moment, isn't there? And politicians notice this sort of thing. And at the same time, the politicians have an unusual degree of leverage they never had before, because they've put some money into some of the most affected entities, but on both sides of the Atlantic. And this is sort of, and to justify this to their electorates in some ways, they then ramp up their rhetoric. Do you think the courts will see this as courts notoriously, of course, are independent, but they also react to the court of public opinion, which you referred to earlier. Do you think it's going to get harder because of that the politicians are wading in?
Yes.
In your case, the TARP was the one.
Well, we've already seen this trend in California. A lot of the claims against the lenders and subprime lenders, at first blush, they don't seem to be that strong. In order to maintain a securities class action, you have to plead scienter, which is a mental state, meaning intentional or highly reckless behavior. And a lot of these cases, it just seemed like the scienter theories that were promulgated and pled by the plaintiffs were particularly weak. some of the early cases were tossed out on motions to dismiss, but the court gave them leave to amend. But ultimately, an opinion came out in the Countrywide case, which is a huge case. It seemed to be the trend-setting opinion in the federal courts in California. So now the judges in these other cases are sort of falling in line and allowing these cases to go forward. So I think judges, and they read the newspapers, they know what's going on, they know the settlement, and it's much easier for a judge to allow a case to go forward at the pleading stage and deal with it later at the evidentiary stage than to toss it out.
Yeah.
Okay, I'd like to move on to a new topic around regulation, and start off with the credit rating agencies, because obviously when an entity has its credit rating changed for the worse at any rate, that has a great impact on its valuation. And often the reasons that are published by the agency for this may reflect negatively in some way on the company. At the G20 meeting, which we referred to earlier, it was decided that all the credit rating agencies should be subject to some form of regulation, so they're going to have government breathing down their neck now. And of course, one of the groups of people who are blamed for the crisis is the credit rating agencies. One minute they were saying companies were AAA or AA or whatever. Next minute those companies had gone bust, and they had revised their ratings about 24 hours before that happened. So the agencies are going to be much more on the case, if you like. They're going to be perhaps making smaller adjustments more often, and that will have an impact on the company. Do you think that's going to be feed through as well in D&O cases?
Yeah, I'm just want to be a little bit careful what I say about rating agencies, because we're quite happy with our rating right now. But I think more transparency and more regulation, provided it's proportionate, is a good thing, and so that creates a clearer and fairer level playing field. And so the difficulties have been, and I think if I put myself in their shoes, some of these financial institutions are very complex, and some of the changes in their financing has been so fast, and it's a very difficult position for a rating agency, knowing that when they make that downgrade, that there can be these domino collateral effects that we saw with some of in the CDS market, the credit default swap market. So it's a hard call for them to, on one hand, be as up to date and reflective of the situation, and at the same time not move too quickly and force issues. As this goes forward, it should create, like better regulation and more transparency, it should create a safer place for directors. But again, I think we're several years away from getting to that point.
And there's a transition issue, isn't there, in the sense of getting from here to there, which will throw a lot of things up in the air.
I think for the last year there were some actions filed against the rating agencies for their own mistakes in conduct. Of course, in the context of a securities class action, a mistake that a rating agency might make in grading a security, a AAA securitization, that's not necessarily fraud at all. That could just be an honest mistake based on financial models that simply didn't work.